Hi there, it's Charles Goddard here. It's Thursday, July 28th, and I'm recording this in Ottawa, Canada. What you're looking at is a weekly graph of gold, and its relevance has to do with a workshop that I'm conducting in a couple of weeks here in Ottawa, but it's a useful thing for anyone to look at because it demonstrates a couple of points. So first of all, we have the basics of identifying a trend. If you look at the left-hand side of the chart, you will see a series of highs and a series of lows. And from the left side down to the bottom near the right, you see lower highs and lower lows, which is the definition of a downtrend. And then on the right-hand side, you see a new high established, a high above the previous high, which should give anybody a warning that maybe the downtrend has come to an end. So unless the next low is lower than the previous low, we can assume that just maybe this downtrend has been broken. And if we look on the right hand side, we can see that we've got a new high, and we'll just see how that firms up by where the next low ends up. Now, what we've got is the makings of a change of trend pattern, which is a head and shoulders. And what's interesting about patterns, and what's interesting about people who don't think much of technical analysis, is the cause and effect. So basically, people think if I see a head and shoulders, that means something. It does, but we sort of got it the wrong way around. The price movement is what creates the pattern. It's the price movement that tells us that the trend may be changed. It just so happens to form a head and shoulders pattern, which is one of the more reliable patterns in technical analysis. So we've got a reverse head and shoulders, which tells us that possibly the long-term price of gold, because this is a weekly chart as opposed to a daily or some smaller time frame, is changing direction. So we can see that we've broken above the neckline, which is the horizontal blue line, and now we've come back to that neckline in terms of support. Now, it can drop a little bit below that neckline, and if it comes back above the neckline and then clears the high that was established on the right hand side, our confidence that the longer term trend for gold has changed from downtrend to uptrend. Now, once we've got that, now we can look at our daily charts and say, okay, because on the weekly chart we've now got an uptrend in place, we're only going to go on the long side of gold. And this is one of the things that you can establish in your trading plan. Now, if you're a day trader or a very short-term trader, you may want to trade short positions anyway. But my suggestion to those just getting a handle on this is that when you see something like a downtrend, as the pattern comes to the bottom here, or as the price goes to the bottom of the chart, that while you're in that downtrend, you only take short signals. Now that we've got the makings of an uptrend, and once that's been confirmed by clearing the most recent high, by the price rising above the most recent high, we will only take the long signals. Now, the reverse head and shoulders, the same with the opposite, the head and shoulders, which indicates when an uptrend is reversed to a downtrend, also gives us reliable targets. So we can see the target that's been established by measuring from the head of the pattern to the neckline, and then taking that same amount and adding it on top of the neckline. So this gives us a fairly reliable target of where this next stop should be for gold. Now, if you this is part of the material that you can find in my ebook, The Alpha and the Omega of Technical Analysis and trading and investing. And if you'd like to get a copy of that, please drop me a line at compellingcharts@gmail.com. It'll cost you $29. And if you want to see contents, I've got a summary of the contents. If you'd like to ask me for that before you decide to buy, I'm most happy to send that to you. In the meantime, also, if you have any questions or comments about what you're looking at or what you're hearing, please make sure you drop me a line at compellingcharts@gmail.com, and I'll be most happy to answer them. So that's it for today. I hope you've gotten some value from it, and we will talk soon. Bye now.